There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Okay, welcome to the Coaches Show here on a Tuesday, and it's good to look like we got a big crowd here developing. We've got Coach Gino, Coach Matt, Coach Noah, producer Phil, and myself. I am your host, Tim Justice. Good to be here. First thing we're going to do is we're going to talk about the big news of the day, the Chinese yuan. Noah, if you could light up your screen, let's bring up a chart on the U.S. dollar index. We're going to start in the currency markets because, quite frankly, that was the news of the day here today. And I'm going to bring Coach Matt in first for opinion, and mostly because Matt drives our Forex report. If you're a new trader out there and you're on the site, one of the things that we're doing is we are providing these stock reports, Forex reports, commodity reports to make sure that you guys stay informed. Matt, explain to everybody out there just really what the heck is happening with the Chinese yuan overnight.
I think that's the $64,000 question, is trying to understand what the Chinese are doing right now. Obviously, for many of you, you understand that we've been going through a currency war ever since 2009. And for those of you who do not understand what a currency war is basically where multiple nations purposely try to devalue their currency against one another to help in exporting and help their economic situation to a large extent. And from literally from the United States to the Bank of Japan to the Bank of Canada to the Bank of England, ECB, Royal Bank of Australia, even New Zealand and everybody else seemingly out there has been lowering interest rates to really encourage to devalue their currencies to help with their economic situation, to help with exporting. And so China, who has been participating in the devaluation of the currency war over the course of the last, really 2-3 years, they dropped a bomb yesterday, an absolute bomb. And, it's interesting to see what the Chinese did, because the Chinese decided yesterday to devalue their currency by 2%. And 2% might not seem like a lot, but when you're talking about a currency, it's a tremendous amount. Now, the Chinese had a couple options, Tim. Number one, they had a lot of room to lower interest rates. They didn't do that. And I think that is very, very important. And the reason I say that is if the Chinese would have just lowered the interest rates, that would have just been par for the course. They would have basically, announced that they're looking to lower their currency over a long haul. But that's not what the Chinese did. The Chinese didn't lower interest rates. The Chinese announced a 2% devaluation of their fixed currency. And so the Chinese yuan, literally in a fraction of a few hours, literally devalued by 2%. And that has grave impacts when you're talking about, in many regards, the number one economy in the world, especially when you're looking at PB producing and as well as exporting. And so when I'm looking at this, I'm thinking, okay, what are the Chinese specifically trying to do? Number one, year over year, the Chinese economy has taken a substantial hit, but we just don't know how big of hit the Chinese market has really been undertaken. And so when we're looking at this, when the Chinese do something as radical as this, by the way, this is the most radical thing that has happened in the currency market since the Swiss depict to the euro in January, but specifically regarding the Chinese currency, this is the biggest thing that's happened in the last 10 years. When you're looking at when they removed the hard peg from the dollar in 2005, they kept a soft peg there. But this is the biggest news we're talking about in China and their currency, one of the biggest ones over the last 10 years. In fact, the Chinese currency has devalued to such a large extent today that it's at the lowest level it has been against the dollar in the last 20 years. And it's not just about the exporting, although that is playing a substantial role, Tim. The exporting year over year has taken about an 8% hit in China. We're talking billions upon billions upon billions of dollars that China has not been producing out there because of the exporting. Because if you look at all the currencies out there in the world, Tim, you have the yen devalued over the last year. You have the Australian, the New Zealand dollar. You have the Indian rupee. You have the Russian ruble. You have all these trade partners with China that have had their currencies devalue massively, which has made it harder to buy Chinese goods. Because if there's two currencies in the world that have basically held up against the dollar in this massive dollar pain train that the dollar's put on over the last year, it's been the Chinese renminbi or the yuan, and it's been Hong Kong. It's been those two currencies more than anything else. And so they've had a direct impact from their economic standing in exporting, given the fact that all these other currencies are devaluing. And so they need to compete against Japan. They need to compete against Australia. They need to compete against India, against Russia, against South Korea, against Vietnam, against Malaysia, all these southeastern exporting countries. And so the agreement was made in part to help exporting, but that's not how I'm reading this. I think that's a byproduct of it. I'm reading this specifically and in grave detail that this is the last indication in a series of indications since 2010 that the Chinese currency will in fact be included in the valuation of the SDR, the IMF SDR. I've been saying that for 2.5, 3 years now. I've been predicting in September, October of 2015 that is in fact going to happen. I've came off that a little bit. I do think it's going to happen in 2016. And the reason I say that, guys, is because last month the IMF released some documents that are very, very difficult to come across, but they released some documents about some negotiations between the Chinese, the Americans, the Japanese, and seemingly the rest of the world. Mm-hmm. The rest of the world outside of Japan and the United States, they want the SDR to include the renminbi in the valuation of that currency. That is such a major decision, ladies and gentlemen, because even though the renminbi currently is, and the renminbi and the yuan basically are one and the same, guys. It's like calling the pound, or the sterling. It literally is the exact same currency. However, one is just used locally versus the international perspective. And so when you're talking about the SDR including, the IMF came out, Tim, and said, quote, the Chinese currency has met, or the Chinese have met to a large extent all the parameters that takes to be included in the valuation of the SDR. However, the Japanese and the Americans argued that it is not freely usable. Now, what that means, ladies and gentlemen, when you're looking at the yuan or the renminbi, you have it within China's exchange rate and you have the international exchange rate. And when you have these two different exchange rates, what China did in essence, Tim, is they tried to make their international currency very similar to their local currency in terms of the valuation. And so what's happening here is they're trying to make it more freely usable. By the way, ladies and gentlemen, although it did rock the currency market and the equities markets around the world, I'm going to tell you right now, this is a good decision by China. This is a great decision by China to make the Chinese currency more free-floated in comparison against other currencies. I'm going to tell you why, ladies and gentlemen. Purely from a trader's perspective, it's going to allow us more access to either buy or sell the renminbi where otherwise we did not have that access. I think this is a step in the right direction for the Chinese currency. I think it's a step in the right direction for the Chinese currency to become a reserve currency. I think it will now be this decision to me leads me to conclude that there's already been negotiations been happening, Tim, to where the currency will be accepted in the SDR, whether that is September, October of this year, or whether they made agreements to push it out to October of next year. I don't know. I don't think anybody does, but it's going to happen. It's a bad thing for the U.S. dollar long term. It is amazing for the dollar short term. Short term, this is going to make the dollar very, very strong, and it's going to make the dollar very strong against a couple segments of currencies out there. Maybe not so much your euros and your yens, although I do believe the yen. But in term relationship, specifically, Noah, if we can look at the Australian dollar against the U.S. dollar specifically. Yesterday in the currency currency report. I don't know if you guys watched it, but if you did, you probably made a very, very good chunk of change today, because yesterday I literally lit up the Australian dollar in the announcement on that currency. And as you can see, the Australian dollar against the U.S. dollar just gets absolutely just hammered in today. But that's not the big one, guys. I actually did something different for a second. I went to the Euro Australian dollar pair, and if you look at the Euro/AUD pair, this is the one where we really saw a tremendous amount of movement go against the pair in terms of the Australian dollar, and I still like it right now. If you can look at it on a daily chart to show the real distance that we're kind of seeing here, Noah, you're looking at these commodity-backed currencies. It honestly just got Australian dollar got absolutely slaughtered today. So you're looking at the commodity currencies that are not going to hold up fair in this agreement. You're looking at the exporting countries in that region that is not good for the value of their currency here. And so you're looking at Japan, you're looking at New Zealand, you're looking at Australia, you're looking at Canada. To a lesser extent, you're looking at the Vietnamese dong, you're looking at the Indian rupee, and you're looking at the Russian ruble in those capacities. South Korea as well. So it's not a good thing for those currencies here. It's a good thing for us as traders, though, because we're going to see a tremendous amount of volatility. And the last thing I'll say on this, Tim, is basically I was expecting a very laid-back week in the currency market, an extremely laid-back week in the currency market until China dropped this bombshell. I think this is a historical movement by the Chinese, and I think this signals more than anything the negotiations that have been ongoing between the U.S., Japan, the Europeans, the Brits, and the Chinese regarding the inclusion of the Chinese renminbi within the valuation of the SDR.
Very good and very much appreciated for all that information, Matt. Guys, I want to tell you guys out there something, a couple things to think about. Number one, when you're new in trading, you have to remember you're not going to be an expert at every field of trading. One of the reasons why we have coaches that cover options like Gino does, and cover stocks like Noah does, and cover commodities like I do, and Coach Matt here just dropping knowledge on everybody about the Forex market, is to keep you guys informed. Okay, you know, if you're out there and you're thinking, well, you know what, I trade naked puts, or I like to play the oil markets, or whatever it is. You might have your specialty in markets, but the one thing we always have to remember is that the currency market is the first domino in the domino effect that we call capital markets. When currency markets move, they have an impact on you. They will have an impact on you long term, and every Tuesday at 7 o'clock Eastern, we're going to be talking about the overall view in the market. Okay, that is the point of this show, is to get veteran traders like Matt to help you interpret it. Now, Noah, one thing I want you to do is I actually want you to go to Tackle Trading, go to the Futures tab, and go to the currency.
Just real quick,
yeah, go ahead,
last thought was Solon's point. No, a strong dollar is not good for our economy. And one last point here, I do not see it good for equity values across the world either. Okay, a couple real quick points though. When Tim talks about capital controls, you will see capital outflow from China due to this agreement because things will be devalued there. I do believe you will see capital come back into the United States from around the world, coming back into the dollar and dollar-denominated assets. And so when you're looking at dollar-denominated assets, you're talking about what? You're talking commodities, real estate, you're talking equity values to a certain extent. So that's number one. And number two, very quickly, interest rates have been asked quite a bit. Is this going to impact Janet Yellen and the Fed in terms of their expected interest rate hike in September? I do not believe so. The Fed has been primarily fixated and focused on data-driven economic activity out of the United States. I do think it puts a little bit of pressure on the Fed, but if the Fed maintains what they have been telling us, you still should see a rate increase based on the data-driven economic data that they've been getting out of the United States over the last 6 weeks. Richard Fisher came out and said some asinine comment that basically says that they can't raise interest rates until 2% inflation is hit. That's what the Japanese said 3 decades ago. Good luck with that, Richard Fisher. Lockhart came out and said they're still on pace for an interest rate hike in September. I'm leaning September, if not September. I'm 50-50 right now, Tim. I did lower my probability on September a little bit. I am adding a little bit of the probability of a December interest rate hike, but I still see a high probability of interest rate hikes coming in this year.
I honestly believe it's going to be December myself. You and I will have to debate that maybe on a podcast and kind of talk about all the angles here coming up. By the way, a lot of good podcasts coming down the line. Just want to drop that quick note for everybody. Make sure that you are downloading the Trading Justice podcast and listening to it on the go and whatnot. I do want to go to right here in Tackle Trading. We're going to get to the stock report in just a minute. Go to the Trade Center, go to the futures, and go to the currency indexes. Noah, I want to talk a little bit about the big picture here when it comes to currency. Matt he's dropping a lot of knowledge. He's talking about the IMF, the International Monetary Fund, creating the SDR, right? Some of you may know a little bit about that. Some of you may not. You need to become educated. You need to surround yourself with people like myself and Matt and Noah and Gino to make sure that you are learning about this stuff. Now, this is the overall indexes, but while we're talking currencies, click on currencies right there on the right side, Noah. And I want to bring Noah in here real quick. And Noah, you're a resident technical analysis expert. Tell me what you see just from a trend standpoint in the 8 major currencies we're looking at right here.
Okay. You hear me okay? I think that your U.S. dollar looks really bullish, channeling nice. I see it forming kind of an ascending cup and handle type scenario where it's looking to take out that $98 zone on the U.S. dollar. Euro kind of consolidated. I'm going to say euro down based off a trend zone, but it's in a consolidation. Got some big support down below it. Japanese yen, I think it's going to break that support zone. It's kind of drifting down into it. British pound, pretty sideways. Consolidation will break out. My guess would be probably upside. Canadian dollar, slowing down. It's definitely giving us a little bit of a slowing momentum pattern, but you got a consistent downtrend. Same thing with the Swiss franc. It's kind of falling into a wedge. Australian dollar, I think Matt's call's right. I expect to see some continued downward movement, go down and retest those lows, and same with the New Zealand dollar. Those are going to keep retesting those lows, kind of make those low base. See an inverted cup and handle on the New Zealand dollar. So, pattern recognition is part of it, trend analysis, but you also have to understand some of the knowledge Matt's dropping is the underlying kind of fundamental, if you will, economic reasons behind the movement. And you got to remember, it's relatively information driven. Those announcements, those reports are going to be what really cause dramatic movement. So other than that, it's highly technical.
Noah, you and I, we got a text message last night. We were both CC'd on it. I think it was a group message from one of our colleagues and mentors in currency. And he said, he gave us the news about the Chinese yuan. What's really awesome about developing a network and having mentors and having teachers is that when stuff like this happens, it's a reminder that, hey, I've got somebody to help me interpret it. Let me ask you this real quick, Noah. As you were listening to Matt talk about the currency markets, how did it make you feel? Did it make you feel nervous or confident that you got somebody like Matt on your team right there?
Well, one, I felt impressed, with Matt's knowledge base. I think I understand currencies and economics really relatively well. Matt's expertise, I think, is definitely something that I would go to if I have questions. Now we consider Matt an expert in the field, and I would certainly, he's one of the people I would absolutely go to when I'm not sure of something myself. And that's, I think, one of the most important things in learning this, I guess I call trading more of an art form than a science, but is having the go-to people to ask questions to, regardless of what level you're on. That could be a simple question about a candle pattern, all the way up to how does some of the policy and how does the currency war affect things? How does the action of the Chinese devaluing their currency 2% really affect us domestically? How is it going to affect the dollar? How's that going to in turn affect equities? It's really, I think, encouraging to me. It builds confidence knowing that those are the type of people we have access to.
And I got to tell you, I tell groups of beginners this all the time. One of the reasons why we're building the team we have here with coaches and assistant coaches and all of you, if you're brand new, even if you're brand new and you get a little overwhelmed, the reason we're building the team is to help each other out. That's not just you guys, that's us as well. I love having a Forex expert on my team, my brother. I love having a technical analysis expert and a big picture expert on my team like Noah, or an options expert. I even like having Phil on my team, even when he doesn't spell words right. I'm good with that, Phil. Okay, so that gives me a lot of confidence. That gives me a lot of confidence to move forward with a purpose. Now, I want to stay with the China thing, but I want to look at the actual secondary layer of the fallout here. Noah, let's go back into Thinkorswim. Let's start with the equities from China, large cap ETF FXI. Okay, and Noah, while I've got you, give me a technical read here and kind of explain what you're seeing on that chart. These are, by the way, big picture large cap stocks from China.
Let me drop it out to a big weekly perspective. And you see, just Chinese market just getting hit hard, but it is in a big ballpark zone support, number wise. As far as like retracements go, that's about that's a 61.8%. Big retracement. Now, as we broke it down looking at on the daily chart, I think one of the things that I always like to do is correlate that volume. So here's some of that negative news in China, big meltdown. But notice now where the volume's kicking in right here. You're seeing some support build in, boom. And then off of their announcement, you've got some above average volume up here again, showing that I think it's going to be good, for their large cap stocks, particularly in the regards to exports, and that actually stimulating their economy by devaluing their currency, which gives that's kind of like the nation of Walmart really can have a lot more buying power, and we can continue them at a better price.
Okay, so we had stocks here in China, and guys, by the way, you can trade an ETF on almost any idea. Okay, you want to trade China? There's an ETF for it. If you want to trade Brazil, there's an ETF for it. If you want to trade a commodity, there's an ETF for it. ETFs are one of the simplest, most important things for a new trader to bring into their system. Especially, how many of you out there are converting from like a 401k to an IRA? That's one of your first steps when you're new. Anybody out there at that phase or that part of what you're thinking about doing? One of the most important things that you can do is build a good list of ETFs, including things like FXI, bullish, bearish, and neutral, that may be going up or down. In that regard, let's stay with a few other areas of the secondary fallout here. Noah, go to crude oil. And for the first time today, we're going to hear from Coach Gino. Gino, come in and give us a take on what's happening with crude oil, what people should be paying attention to, and why this slide continues to be so aggressively bearish, if you could. And check your mic there. There we are.
Thanks, Son. How you doing?
Good, man. How are you?
Good. Yeah, so oil's a big story lately. You guys could go back to our July 14th coaches show, and you go to the one previous to that, and you go to the one, I think, July 21st, July 14th, as a matter of fact, I think 33 minutes in, we were having a conversation on this exact topic when we said it's going to break down below that channel, and our target was 48 and then down to 42. Guess what it hit today, guys? We got to the 42s, didn't we? And that's where the support is. So we're right there. So we had three different shows where we talked about that target. I had a target of 48 and 43, and that got hit a few days ago, and then we hit 42. So now we're on support. We might get a little bit of a bounce here depending on where the dollar goes. The next level I have is probably the low 39 to the 38s if it breaks 42.40. There's a little bit of support, believe it or not, at an even 42. I don't know why, but that's from an insider, and that's where that's going. So real quick question, a little survey to the audience here. When you see oil dropping like this is an international commodity. Do you think that's because supply and demand? Do you think demand's winning or supply's winning? It's a pretty easy question. So when oil's dropping, there's low demand, high supply. It's a global signal that things are slowing down in oil demand. So not good economies. So that would equal bad economies. Okay, next question. When the news came out on China, because it's hard to digest all this stuff on China, guys. A lot of you guys work 9 to 5. A lot of you guys have families like me. A lot of you guys don't have economic degrees and college degrees like the rest of the coaches here. But to me, it's a lot to absorb. To make it easy versus all this crazy advanced stuff we're throwing around, here's an easy way to put it. When you hear news that rocks the market or there's big news out, what you got to do is you have to tag it. Is it news that points to a good economic condition or a bad economic condition? So when China's news came out, let's say all you heard was the headline. Would you say that's because they have a good economy or bad economy? There you go. You don't need to read into it any more than that. And every time news comes out that's going to be similar to that, it's going to get less and less effective. All you have to know is the market's going to react to it just like you thought. bad. Okay, so there's a lot of news headlines out there. All you have to do is tag each one when you're going through the headlines. Is that good economic news or bad? Did they make that decision because everything's rosy and good, or did they make that decision because things are bad? Are we going to war because the economy's good, or are we going to war because the economy's bad? Are they going to raise interest rates because the economy's good, or are they going to raise interest rates because the economy's bad? You can tag everything, and the economic conditions should relate back into the markets. Okay, just a little trick so you can digest the news a lot faster versus trying to read all those headlines. Because I read so many headlines about China this morning that I said, okay, why am I doing this? This isn't good. This is a global economic slowdown. I cannot tell you how many times I read the word currency war. Currency wars means volatile everything. It's going to affect everything, markets, commodities, agriculture, your current lifestyle going forward. Currency war is never a good thing. If you have a chance to read the book that's over 1,000 pages called Currency War, it's a race to who could crash their dollar to pick up their GDP. So with that, Tim, oil, it's still a sign. By the way, if you guys look at the biggest moves down in oil like we've had in the last couple months, when you get moves down like this has always preceded a bear market. The commodities, especially oil like this dropping, is always preceded a very bad bear market, which we'll get into the market report here pretty soon, Tim, because I want to show you guys something really important. So there you go.
Yeah, for sure. Yeah, very good, very good. Much appreciate the insight. And I actually like the way that Gino just simplified it there. Is this a good report or a bad report? You know, now, by the way, it doesn't always mean that price is going to respond in kind right away. There are plenty of times where we look at a news headline and it looks good on its face, but then the market goes down. Have you guys ever seen like an earnings report come in and the company beat the earnings, but then the price went down? Okay. This is why I would always remind you guys, focus on the charts. Focus on the charts. Look for the fallout on the charts. Let the coaches and the mentors and the experienced traders help you understand the news. We've got the experience and the context there. But I do like simplifying and try to break it down. One more product here that I think we've got to talk about, because China is one of the major buyers of gold in the marketplace, either GLD or /GC, Noah. And I'm going to bring Matt back in here because Matt talks about developing a personal gold standard, and Matt talks about developing, precious metals as part of the long-term vision. Matt, you and I, we've had a lot of discussions about gold, metals, the role of metals in somebody's retirement long-term portfolio. Break down what you're seeing here and what you've been picking up on from the news.
Well, a couple things. Number one, and it's a little confusing, guys, because there's a couple different things going on here. Number one, when China devalued the way they did last night, and you can't see the Chinese currency within Thinkorswim, you'll have to look at it in your MetaTrader 4 platforms. USD CNH is the symbol. When you look at something like that, China is one of the largest buyers of gold. And when gold is priced in U.S. dollars and the U.S. dollar goes up in this and the Chinese currency goes down, they are going to buy less gold. They're going to buy less gold, and so this is going to put some pressure on its MT4 MetaTrader 4 depth, but it's going to put pressure on gold. But at the same time, and this is kind of where the confusing part gets into here, Tim, and I'm still trying to really kind of run all the numbers here. So this is I'm not done running my numbers, so this is just kind of an opinion more than based on some fact out there. But with China buying less gold, but then you also have capital outflows coming out of China into the U.S. dominated and U.S. priced assets such as gold. And so gold actually, went up today, even though the dollar went up today, because it signifies you have money coming into dollar-denominated asset classes. I think this signals more than anything else, Tim. We can talk till the cows come home about all the different ramifications of what the Chinese did to all the equity markets across the world, to the impact of the currency wars as well. But at the same time, I think that one thing we always have to focus on. I think the one thing that we have to focus on here is that the importance of what the currency war really represents. And that is, more than anything, I think what the Chinese did really leads me to believe that the personal gold standard is even more important today than it ever has been with what the Chinese did. I mean, just think about it. Just in the last 6 months, we've had a black swan event in currencies with the Swiss franc. We had the Chinese coming out and doing what they did, creating undergoing massive volatility out there. We're undergoing one of the biggest, largest, most expensive currency wars that has ever been existed. It's seemingly every nation in the world has lost their collective mind regarding currency. And it represents a lot of opportunity for us as traders. But as a consumer in America, it's also vitally important that we start protecting the value of all currency. And yes, the news today was seen as a good thing for the dollar. And yes, today it means, today is in right now, Tuesday, August 11th, it means owning gold and silver is not as important today as it was even yesterday. But when I'm thinking long term, I'm looking 5 years down the road, I'm looking 10 years down the road, I don't see how what the Chinese did today is good long term for the dollar. And that's because, like I said initially, guys, to me, everything the Chinese did yesterday has everything to do with becoming an international reserve currency. And ladies and gentlemen, the number one reserve currency in the world is the U.S. dollar. And I do believe long term, 5 years, 10 years from now, this leads me to yet a stiffer, more concrete, more convicted belief that the dollar will lose its reserve status. And no, not to the Chinese renminbi, but to something else out there, whether it's the SDR that becomes a currency over time, or whether it's the NDB or something along those lines. It's vitally important for us to protect that long term. And so, in my opinion, owning precious metals is more important today than it ever has been. And if you own the precious metals, then yeah, if we start to see price continue to come down, let's put some put options on gold or silver to protect our physical investment. Does that make sense?
Makes perfect sense to me. And one thing I think that we need to remind everybody out there right now of is that things like the IMF and the SDR, Matt, you and I, we're going to have to hash that out on a podcast here soon, because you do get into complexity. The renminbi, it's already the fifth world reserve currency now. If it gets instituted, probably going to bump up to the third with a trend in the right direction. It has long-term implications. But the reality is, guys, markets change not just because news comes out. It's when expectations change. See, we already knew that the Chinese were trying to position their currency to do all this stuff. When they unpeg it, it's that the news now gives us a different expectation. That's where the volatility comes in.
Well, and Tim, to talk about the layers of detail here, and yeah, we'll have to hash it out on a podcast, but the Chinese are going to be valuing the currency every day. Yeah. I think about that, guys. You're going to see in the Chinese currency. It's not going to be every day, but you're going to see the Chinese currency. And one of the things that they did was it allowed the Chinese to basically make the outflow of the currency the same as the inflow of the currency, and they're going to price the currency. It's not a free-floated currency such as the U.S. dollar or the euro or the yen is, but at the same time, the Chinese currency now is going to be much more free-floated against the other currencies, because the Chinese is going to price it there every day. And you're not going to see massive movement like we saw today, but at the same time, you're going to see some movements in the currency market. And you can trade the Chinese currency, guys. You can trade in MetaTrader, symbol is USD CNH. That's for the Chinese renminbi that you can actually trade on the international stage. So I do think this represents an opportunity, and more than likely it's something that I'm going to put into the Forex report. Maybe not every week, but certainly start to analyze it. Tim, I do want to show the Chinese currency movement very quickly. And no, if you don't mind, can I hurry and share my screen, and then I'll quickly turn it back over to you. I just want to show it just to show you the movement we're talking about, guys, because I don't think talking about it really does it justice in terms of how big this movement was. And so when you're looking at this currency here, guys, I want you to see this movement we're talking about. Look on your screen here. That's the movement we're talking about. These are daily charts, guys. Look at what we're seeing here. Look how little price movement you have when you had that soft peg. You removed it, and all of a sudden, boom, you get this amazing movement in the currency market. And now this is today's price action, and we really haven't seen the Chinese markets open up yet. And that's not going to happen for another hour, an hour and a half from now. But I'm looking forward to now really making the Chinese currency a part of the Forex report. And I think one of the things that we do in the Forex report, as well as just over there at Tackle Guys, and I think one of the most important things we do is make sure that you guys are aware and prepared of anything that goes on out there, because Gino's right. It's overwhelming. And you know what, guys? People who do have economic degrees don't understand it. People who have doctorates in economic theory don't understand it. It takes traders with experience to understand the price action. And I didn't have an economic degree in monetary policy. I've lived it for 10 years. I've traded it for 5 years. I've studied it. It doesn't take the geniuses of the central bank economic theory to understand when we see situations like this, it always represents opportunity. And at the end of the day, Tim, that's what we always have to focus on, is not the fear that these types of price movements create in the global markets, but the opportunity, because we can buy, we can sell, we can trade neutral, we can do whatever we want. Everything we do is all about information. And the simple reality is he or she who knows most and is informed most and takes action is typically the people who are wealthy beyond the wildest imaginations at the end of the day. And that's why we're all here, to get better, to learn more, trade better, and make more money. Would you guys agree with that?
Cut it, tweet it, get it out there. Hashtag Coach Matt. I love it. In fact, maybe we'll do a Twitter contest at Matt Justice and give us one of Coach Matt's great lines from today. I love that. Absolute great context. Noah, bring your stuff back up. We're going to change gears here for a minute. Big announcement, by the way. We have our stock report. Okay. One of the things we've been doing over the last 6 months or a year is we've been trying to develop a way for you guys to be informed about every corner of the market. Options, commodities, Forex, and stock. And I got to tell you, I saw Noah's stock report over the weekend. By the way, if you have not seen it, go back and watch it. Go back and look at it. If you've not seen the commodity report, go back and watch the video from Sunday. Guys, we put these reports out every week to keep you informed, okay? Who here is taking advantage of the reports, by the way? Everybody give Noah a thank you or a yes I am or something. Yeah, Noah. Spend 5 or 8 minutes or so at the most, maybe just 5 minutes. Kind of just, instead of explaining the picks you made, just kind of talk about the theory and the philosophy about how you're going to approach the report. And Noah is on mute. Whenever a coach is on mute, I'm going to just start singing. And if you guys don't want to hear my voice, you're going to check your mics.
I got a request, Tim. Can you do Freebird?
I can, actually.
Can you hear me now? All right. I could not get to my microphone because all the thank yous were covering it up. So
sure can, Noah. All right.
There we go. I couldn't get. All right. Okay. So just walking through what I set out to do is I kind of started thinking about where I really cut my chops as a trader was just trading stock. And, I started out, I was really well undercapitalized. And I just thought about what the qualities of a general stock trade would be. And, I wanted to make sure I offered stocks for, that one had, good technicals that synchronized with the market, with the sectors, and then, offered a variety of price points on the stock so that everybody could find something to trade. So what I did when I set out to do the stock report is I actually took some of the content and information I did earlier this year just to make a real quick reference guide to include some of the seasonality. So can you guys see my screen okay? Okay. All right. So it starts out with the 20-year historical reference, just a chart of the S&P. These are static pieces that just to give you a quick reference of where you are. And, if you're looking at where early, second week of August, you'd want to take a look at how August historically over the last 20 years, which really is your modern trading era. So it gives you a nice, this is up under the scouting report. And it'll have its own tab. Right now, it's just under the main scouting reports. So just go click on the main one. And it just gives you an idea. You can see that the strongest runs come through spring and through fourth quarter, and that we're heading into potentially some of the more volatile time of year. Then I also put up some of the information on the sector ETFs and how they perform by month on average. You get an idea of what ETFs do what, and you have a good idea of where you might find opportunity. So have the best and worst ranked sectors by month over the last 15 years. Have those broken down so you can look at each of them, from worst month to best month. So you can pop those out. You can dig in and actually get a big, better look at these graphics. So you can actually understand, for example, basic materials worst in September, all the way down to best in April. So that's kind of, you can get that for each sector. So just kind of general information there for you to help reference it. Then it goes through current broad market analysis, looking at the major market indexes. And then what I decided to do here is go with area charts, which is not something I've ever done before. But the basic idea is let's not overthink the technicals and just look at the overall trend. So I just threw up together area charts with moving averages and volumes, so we could just say overall, okay, the S&P for the most part sideways. Don't overthink the technicals. The Dow, diamonds are kind of showing a little bit more of a rollover. We got a crossover on moving averages, some lower lows in support zones, but you don't have to overthink the technicals. Just going with, in fact, sometimes the less you think about the technicals, the better, just by looking at overall price action. So you got those broken down, so you can look at the major market indices, and I, included things like the Russell. I included the dollar index ETF. And then I thought of what else it needed, and I went and picked the commodities, general commodities ETF. So the commodities ETF is just kind of, you can see the overall trend of what's going on with the general commodity picture. That includes all your major basket of commodities. So you've got those access to those reports, and again, it's very, very quick for you to go in, and so every week we'll do a quick static information will stay there, and then the weekly updates for the broad market will come out, give you the basic chart. You can then get in and dig in by sector. We can get in and look at how they perform, by sector. And, you can go through and actually see general overall picture and trends. So, for example, here we got, basic materials, financials, industrials, technology, staples, utilities. You can kind of get a big picture of what they're doing. Then went and put together a little way to rank it for us. So we can actually look at the markets, and I broke it down into a little football field here. So you can kind of go between the Bulls and the Bears. And overall market sideways, S&P sideways. Which sectors were weak? Got the kind of a common theme here if you actually look at this. You've got your commodities, basic materials, energy, and industrials all bearish. That's like Matt said earlier, it's a very strong sign of weakening economies, that we're not seeing a lot of production. Where we are seeing strength is in the U.S. dollar, financials, staples, and healthcare and cyclicals. Those have been strong. Utilities have made a bit of a reversal, and then, you kind of take it from there. So the goal would be to make sure when you're picking your picks, when you're looking at the picks, I took the picks from the actual report, and, on the spreadsheet, just kind of have it again, so it gives you by sector and group how the market's doing, so you can see what the gauge is. You can kind of get a good look at that. Where, Spider's neutral, diamonds are moderately bearish, Q's, neutral to cautiously bullish, IWM moderately bearish, UUP moderately bullish. So you can kind of get an idea. Then also by sector, XLB, XLE, XLF, so on and so forth. So you can get familiar with those. Then went and picked some basic bullish picks, neutral picks, and bearish picks, and did them in a general price range. And, over $100, between 20 and 100, and then under $20. So you could find good candidates that have, potential, leverage for you without having to get in and trade options. Now, can you trade options on these? Yes. Is this going to be the same as the option report? No, it's going to be completely separate, and it's definitely something you can get in and look at. And, we kind of look at how the market performed since then. We can get a good look at, I put these out Sunday. We'll be putting them out every Sunday. So you can get those listed by ticker, sector, ATR, the potential average yield, trigger price, stop price, target price, estimated risk, estimated reward, and then just seasonality. How does it normally perform this time of year? So seasonality you can read a little bit too much into it, but it certainly helps to know that there are certain seasonal cycles. So when with some of the bearish picks, we had the same thing. Price ranges, everything's filtered, high volume, optionable stocks, shortable stocks, ticker symbol sector, ATR, potential average yield, so you can help you kind of figure out some of your reward risk. Suggested triggers and stops and targets. You can obviously customize those, but general ballpark, estimated risk and reward in points. It would be up to you to position size appropriately. But, picks so far this week have been pretty interesting. The, Bulls popped early, and then the Bears have done well today. And then the neutral candidates are really designed for stocks you could pick that pay a dividend perhaps and could be used for writing covered calls.
I got to tell you, Noah, thank you very much for putting this out there for our team. It's pretty awesome.
Well, it's fun to do. It's going to probably evolve a little bit. I'm sure I'll tweak it here and there. If you've got any feedback on it or things you'd like to see, certainly by all means, this is we'll call it a dynamic product that we want to make sure we're delivering you what it is that you're looking for.
You bet. Now, a couple of things to remind everybody. I saw a few questions coming in the chat. One of the reasons why we chose the 4 products we did, guys, options, commodities, Forex, and stocks, is because those are the ones that are most tradable. If you're a brand new trader and you just focus on one thing, I got to tell you, I've got students in my office I'm mentoring this week working on helping them build their business. We went through an entire segment today talking about all of the capital markets, even though I think at the end of the mentoring, we might only trade 3 or 4 strategies. Why? Because context and information will help you become a better, more profitable, more informed trader, even if you are of narrow focus in your strategies, okay? Love the report. Love the stock report. Let's take advantage of it, guys. If you have not seen the 4 reports this week, your homework tonight is to go back and watch them. In terms of priority, the number 1 priority every week is to watch this coach's show, because this is where we lay it down, okay? This is where we drop the knowledge. And then watch the reports. Who here has made money from the reports in the last month? Who here has made money from the reports in the last month? Guys, if you're not popping in yes, here, look at all these people, all right? Make sure that you're taking advantage of these reports and this information. Okay, that commodity report, by the way, Gino had mentioned July 23rd or something like that. Guys, we went bearish on these about a month ago. Leave it on that. Go back and watch it. Okay, real quickly, Gino, a couple minutes. You've got a new tool you've put on the site. Why don't you come in on the audio and tell Noah where to find it? And by the way, guys, let's load up rapid fire while Gino explains this. Get your stocks up. We're going to be doing rapid fire in 2 minutes.
Hey, guys, I got 3 really important things to go over real quickly. So first thing is blog. Go to blog. A lot of people are not noticing a lot of things here. Blog is the first thing. And click on blog. And notice the market recap on the left right there. See the market recap? We have market recap. Go and click on market recap real quick if you would. You click right on the link or read more right there. And this is going to be just a blog of the market recap. I put it out quite a bit. We have a weekly one like Noah just did. Our daily one is sometimes a video. I like the blog because I can print it out. As you know, it says economic news on top. There's a link to that takes you to the news. There's the economic calendar right below that. Tuesday, Wednesday, like tomorrow, Dudley speaks oil inventories. Major earnings is right below that. Tomorrow we have Macy's and Kohl's. And right below that is markets. I want you guys to notice something. Next to S&P, it says bear slightly. Look for close below the 20-day, 200-day moving average. That's an extra place, an extra little note. Now, see S&P down there? If you click that, you'll get a chart. All the symbols have charts linked to them. So this just tells you a little bit more what to look for to plug in. So if you could take 2 minutes out of your day to go to the market recap, even the sectors here, I put them down bear, bullish, neutral, whatever. The ones in bold are the ones that I'm eyeing. They're the ones that I'm looking at closely. And if you go down to the bottom, you'll see oil and all that stuff, and the world watch, and most importantly, coaches' trading thoughts of what we think for the market recap, what we're thinking about doing with it, and where we're going bullish and bearish. So that's a daily thing to look out for. It's not going to come out every day. We're going to try to put out as much as often if things change. That's the first thing. Second thing is if you go to...
Real quick, we got rapid fire. Show us these awesome tools. By the way, I might be most excited about these tools, and we haven't even talked about them yet, Gino. So I love that they're here. Show them to everybody, but remember, we got rapid fire here in just a minute.
Number one, just click that. You don't have to click the link below it. Just click... First one is on the left. We have a downloadable link to Matt's Roid tool. It's a Roid tool here. You can click it, and you'll see if you just open it up. Right below the pic, you can keep sliding down below the picture itself. There's the download link right there. Now let's go back to Trading Room. That's to get your risk and return on credit spreads and credit trades. So you can download that tool to your desktop. The next one in Trading Room that we added was the option position sizing tool. And I want to give a big thanks to Marius Posagan, if I said that right. Marius Posagan.
He's got like 6 names.
Developed this for us.
I'm just going to call him Batman from now on. But big shout out to Marius. Yeah, he did a great job.
Then that also, you just input your information in there. It will calculate it. Lastly, Tim, if you go to option report, this tool is also available on that option report. So you guys can see the maximum number of contracts you should be doing. Maximum, not minimum, maximum number of contracts you should be doing or shares. It'll be on the scouting report. Now, one more big thing, guys, big announcement, because this is a big thing. I manage a lot of money. I don't know if you could bring up a chart or not, Tim, or if you have the MACD in there. I don't know if you do. I have it on my screen right now. But when you bring up the charts at the beginning of the rapid fire, what you want to do is you want to put the SPX in there right now. This is a big thing, guys. It's probably the best news of the week right here. I have an indicator I've used for over 10 years. So on the S&P, do you have a MACD on there? You want to do a weekly MACD. Here's the number on the MACD you want to use. 8, 17, 9. And this helps me make 90% of my decision on when I'm moving money out of 401ks and IRAs and putting them to cash. You guys follow this. If you're managing your 401k, your IRA, this indicator right here. Now, I don't know if you can see the MACD. It's kind of yellow. When both lines on the S&P weekly, see the lines down there? Can you make them a little darker? The first line crossed 0 today. If that second line crosses 0, there you go. Make that red or whatever. It doesn't matter. They both have to be dark, whatever. There you go. Mm-hmm. And let's see what it looks like now. Make that one darker too on the left there. There you go. Okay, the first line you can't see it. It's when that second line crosses 0. The first line's crossed 0. You see that? When that second line crosses 0, that's always preceded a major drop in the bear market. It's not there yet, but if you look back at the dot-com crash or the financial crash, it's gotten me out of the markets and made me go bearish and saved my butt many times.
Love it.
It's really helped the 401k.
I love it. I got a challenge for you, Gino.
Hey, we got rapid fire, guys. Let's go.
I want you to do a video, Gino, and explain this. Let's do our rapid fire right now.
Hey,
MACDs are indicators, guys. They're great. Let's light up MACD.
Guys, there's videos over at Tackle Trading. There's videos over at Tackle Trading on the indicator.
Rapid fire, though. And let's start. Okay, triple D, Noah. DDD.
Triple D. I'm going to go bear retrace on that. You got to.
Tim, I think you're lagging, brother.
You know it. Go ahead.
Okay.
Matt, you want to lead rapid fire then?
I'm going to go with bear retracement.
I don't have the list of the candidates. Noah, you're going to have to.
Can you hear me okay?
Hey, guys, everybody just calm down for a second. Tim, you're lagging. Noah, you're lagging a little bit. Just give it 1 second. Noah, you're going to have to lead rapid fire. You got the list, so you lead it out. Call out the person. Noah, 10 seconds per. Let's go. We only got 5 minutes.
Okay. I don't have the list offhand, so you have to throw them out to me. DDD. I'm going to go with bear retracement. Nice move up into the moving average after earnings. Watch for a drop.
CMG, Noah. Okay, no, CMG's mine. Of course, CMG has to be mine. CMG is completely overextended. I wish I could short it, but I'm not going to short that much strength. Wait for a retracement. Maybe a bear call right now. Wait for the retracement. Add the bull put. Gino, you got Disney. DIS.
Okay, Disney. They got hit hard after earnings, guys. I was looking for them to retrace and fill their gap, but it looks like they just did a swing high. It is now bearish. I wouldn't mind doing a trigger below today's low to buy puts.
Noah, you have UNH.
Consolidation leads to breakout. You've got inside consolidation on this one. This can go either way, whichever way the wind blows in the market. I would certainly have no problems going bullish if we see that. If it breaks down, go bearish.
ABX, Noah, that is mine. This is Barrett Gold. Barrett Gold had a little bit of a rally, bear rally coming back into resistance. I still think there's some upward movement and pressure here, so I kind of wait before I short it. Maybe coming back into the 8.5, even the 9 range before it's shorted. Let's see, Gino, you have Starbucks.
Yeah, Starbucks, discretionary play. Discretionary numbers are going to be coming out here pretty soon. That's retail numbers. Look for the swing low on this, but I wouldn't get into it and gets back above the 20-day moving average. It is a bullish pullback.
Thank you, Noah. You have AEP.
I see. One, utility. This looks just like the utility sector. It's got an inverted head and shoulders. It's currently forming a cup and handle and banging its head on the 200-period moving average. Being electrical power, I'd probably double-check that, cross-reference against the utility index. I think this is breaking out. Seasonally, it should.
Awesome. Let's see. Next one is Yum Brands. That is me, YUM. Yum Brands, big breakdown, wide body, lots of volume, not on earnings. Love the breakdown. Look for this to continue to drive down, most likely right into $80 where that current 200-day moving average is. It's also an old resistance level. I love this to continuous momentum to the downside. Next, we have CAR for Gino, CAR.
Okay, that's an easy one, guys. That's a swing. That's a bearish retracement. That's already starting to go back down. Great bear pick right there. And they're in the transports. Transports is neutral, so this is a good trigger below today's low to buy puts.
Love it, Gino. Next one, Tesla, Noah.
All right. Tesla drop after earnings, slowing down into support. I wouldn't be a buyer until I saw confirmation up. I don't know that I'd really short it. Double check their earnings report and see what you think, but I think we're going to see some support coming in here by the time it hits that 200 period moving average.
200 period moving average, historically a buy zone. Thank you, Noah. Next one is Walmart, WMT. That is for me. Walmart consolidating short-term intermediate bearish downtrend, looking for a potential bottom here on Walmart around, what would that be, about $71, Noah, somewhere in that range. Look, it still looks like it has some bearish mood.
You think China affects the great?
I would definitely say China impacts Walmart. I would not be a buyer here on Walmart. I'm looking for a breakdown of $70 in that range. Next, let's go with ALK. ALK is from Owen, and that is going to be Gino.
That is definitely bullish. That's Alaska Air Group there. Transports, once again, is starting to go a little bit bullish here. And, yeah, it's a nice channel. I like trading this. This is definitely bullish.
And last one, let's go with data for Noah, DATA. 6 o'clock, Noah. End them on a good one.
She got beat up on the earnings report, dropped hard into that 200 period moving average. Finding a little bit of support, I wouldn't take a bullish posture on this unless I really understood what their earnings forecast was, what their guidance was, and why it dropped. But it could be a potential buy opportunity for people because of the discounted price. So
awesome.
Could be a buy. Double check your data.
Awesome. Thanks, Noah. Guys, I'm sorry we didn't get to all of the rapid fire. We got a little late start to rapid fire. We'll try to do a little better next time. This is Matt Justice, Gino Porn, Noah Davidson, Tim Justice, and our producer Phil. Thank you for attending the Coaches Show for today. Hope you enjoyed it. Hope you learned something. We bring the fire every week so you guys don't have to, guys. Thank you for all you guys do. The only reason we are here is because of you. So until next time, thanks, everybody.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.